Ladies and gentlemen, good day and welcome to Q4 FY22 earnings conference call of Premier Explosives Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Mehta. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. I, on behalf of Stellar Investor Relations, welcome you all to the Premier Explosives Limited Q4 and FY22 earnings conference call. We shall be sharing the key operating and financial highlights for the quarter and full year ended March 31st, 2022. We have with us today the senior management team of Premier Explosives Limited, Mr. T.V. Chaudhary, Managing Director, and Mr. Srihari Pakalpati, Chief Financial Officer. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainty. Documents relating to the company's financial performance have already been emailed to you. Now I invite Mr. Chaudhary to share his initial remark on the company's performance for the quarter. Thank you, and over to you, sir.
Thank you, Mr. Vishal. Good afternoon, everybody, and thank you for joining the call. We'll begin the call with a key industry update, followed by an update on the company's operational performance during the quarter. To begin with, the government's impetus towards defense sector continues to be promising, and India's defense budget for the financial year 22-23 stands at 5.25 lakh crores, with an increase of almost 10% from previous year's budget, with a major push on procurement of weapons and military platforms from domestic producers. Of this, 1.252 lakh crore is proposed to be utilized for capital expenditure that includes the purchase of military equipment, warships, and new arms. The procurement of this is also focused at promoting the domestic manufacturing of defense requirement. Out of the total budget allocation, 68% of the budget will be sourced from the domestic industry, and 25% of the defense budget on R&D will be kept aside for partnership with private sector. As per the Finance Ministry, the Government of India is committed on reducing imports and promoting self-reliant equipment for the Indian Armed Forces. Through the special purpose vehicle model, private industry will be allowed to design and manufacture military platforms and equipment in collaboration with DRDO and other organizations. India's defense industry will evolve as a strategically vital sector and a source of employment in the private sector, with a primary focus on improving the country's war-fighting capabilities. Due to the technological complexity of modern weapons and the government's preference for domestic suppliers, competition in defense manufacture is still developing in India. As the Atmanirbhar Bharat program in defense develops and more chances are made available, active participation in the development of credible military manufacturing lines can be vital for the development of MSME culture through entrepreneurial ability and creativity. And with the recent testing of missiles, India conducted 2 successful anti-ship missile tests, BrahMos and Uran. And you are all aware, BrahMos, the anti-ship missiles, India has signed a big order with Philippines. In addition, India also successfully tested a new version of the BrahMos supersonic cruise missile off the coast of Odisha in Balasore. So these are the interesting areas where the growth is going to take the impetus. Now, apart from the defense sector, coming to industrial explosives, compared to the year 21-22 and the 2021, things started improving in terms of raw material prices. Raw material prices have skyrocketed up to almost 200% in last 1 year, which made it very, very difficult to survive and then supply. But now things are changing, the prices are stabilizing, and also the supplies for coal sector, pricing of the supplies to coal sector, policy and all those have changed, and that has brought a little relief to the industry. Now coming to our company's performance, after numerous headwinds in the recent past, we are now moving towards growth trajectory. During the quarter, we have generated healthy cash profit of rupees 16.67 crores. The changing business mix with the increasing contribution of defense segment will augur well for our overall margin. Further, with the pandemic-related disruptions hopefully firmly behind us, we are experiencing strong momentum in our execution. And let me update you on the status of few key orders received during last few weeks. We have signed a contract with overseas customer for USD 13.13 million for supply of rocket motors, and received order from Singareni College Company Limited worth 104.84 crores for supplying of SME explosives and accessories. Signed contract with MOD for supply of a new family of munitions for a total value of 44.58 crores, and received order from MOD for manufacturing of 50 MTU flares worth rupees 57.90 crores. These are some of our notable orders. We are extremely pleased to report that our current outstanding order book as on date stood at approximately rupees 630 crores, which translates into more than 3 times of our financial year 22 revenues. The dispatches for Sharp and Flare were as per our expectation. And the other areas where the new missiles, that is production of BrahMos, Pralay, we have already reached the stage of completing our TOT and entering into commercial bidding. Apart from this, the supplies towards MRSAM requirement and Astra requirement, they are progressing, and these are dependent on the FIMs to be received from customer. The supplies will depend on the FIM supply status. And in the last quarter, we have supplied a total of 84 numbers of MRSAM and 7 numbers of Astra, and further quantity is going to be delivered in the current quarter. With this, now I request our CFO, Mr. Thierry, to give the financial performance. Thank you.
Thank you, sir. Good afternoon, everyone. The result presentation for the fourth quarter and the financial year 2021-22 has been uploaded on the stock exchanges and on the company's website. I believe you all may have gone through the same. Now, I would present the financial results for the quarter and full year ended 31st March 2022. The revenue from operations for Q4 stands at 60.5 crores as compared to 35.4 crores corresponding period last year and 50.8 crores in Q3. Our operating profit for Q4 stands at 4.9 crores as compared to 7.1 crores in the corresponding period last year and 4.5 crores in the Q3. In Q4, we reported a net profit of 1.2 crores compared to 2.7 crores in Q4 last year and 60 lakhs in Q3. The revenue from operations for financial FY22 stands at 199 crores as compared to 153 crores in the corresponding period last year, which is translating into 30% growth year on year. EBITDA for financial year 22 stands at 22.3 crores as compared to 6.6 crores in the corresponding period last year, which is a strong growth of 235% year on year. The operating margin of 11.2% in FY22 improved from 4.4% in FY21. Net profit in FY22 stood at 5.6 crores compared to a loss of 10.7 crores in FY2021. Your company has always rewarded our shareholders, and on the back of the robust performance, the management has announced a dividend of 1.50 per share, which is translated to 15% of the face value. Now coming to the order book, the company's current total order book stands at 630 crores, out of which explosive business comprises around 137 crores. The higher margin defense segment is at 348 crores, which is around 55% of our total order book, and the service segment is for the balance, 146 crores. This order book represents a strong growth over the previous years and is at the highest ever level. We are confident that with our continued execution run rate, our forthcoming quarters will continue the growth trajectory that we have seen in the past few months. With this, we now open the floor for questions and answers. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Participants, to ask a question, you may press star and 1. The first question is from the line of Shivan MS from GHP Securities. Please go ahead.
Good afternoon, sir. Am I audible?
Yes, sir.
Yes, sir. Thanks for the opportunity. So my first question is on our margins. So we've been having greater exposure to defense, which is a high margin business. But during the quarter and the last couple of quarters, our margins have been under tremendous pressure. So could you just explain the reasons for the same and what is the outlook going ahead?
You're right that there are some good margins even from the defense sector. I mean, the margins have been continued. But with some sort of losses absorbed from the SMS, I mean, bulk explosives and other commercial explosives. So it is something like a net adjusted profit, we can say. But coming forward, I think with the kind of revival happened in the bulk explosives and commercial explosives, so we are confident that the things will be comfortable and the margins will be improved. Overall margins will be improved.
Okay. So if I look at the GP margin of March and of December, means March has been around 45%, December has been around 50%. So what is the reason for this dip in the gross profit margin, sir?
So basically the change in the product mix. Because the contribution from the defense was, great in the area. I mean, March quarter last year. This quarter it is the best contribution. Moreover, the product mix also, because we have got the different products which have got its different margins. So basically it was a net of the product mix.
Okay. And sir, moving ahead, where do you see these margins stabilizing at? Considering we have a 630 crore order book, what is the broad margin range that we are looking at while executing this order book?
Yeah, like I explained in my opening remarks, and also what Mr. Srihari said, the last year there was a lot of strain on the balance sheet, our profits and bottom line, because of the unexpected increase in raw material prices, ammonium nitrate and the bulk explosives. But the prices were committed earlier. We had to maintain our supplies as per the prices. So we had to take some kind of loss or beating at that area. But now the prices have stabilized. Ammonium nitrate prices have come down. And the pricing and the price escalation clauses and the present order, all those, there is a revision in that to help the industry to come back. So I think that will take care of whatever beating we took in the last 2 quarters of last financial year. Now we look forward to make the big margin there also. With that stabilizing and then supporting, now the margins from defense industry being good, and this coming at least not going in negative direction, we are hoping that the next year is going to be good. Hello.
This is the operator. Mr. Shivan, do you have any more questions?
Yes. Can you hear me?
Yes, I can. Mr. Shivan,
Hello.
the audio is breaking from your line. Please check. The audio is breaking from your line, Mr. Shivan. We are not able to hear you clearly. We request you to rejoin the question queue. We'll move on to the next question from the line of Devang Shah from InvestSavvy Portfolio Management. Please go ahead.
Good afternoon, sir. Am I audible, sir?
Yes, sir.
Sir, my first question, what's your revenue growth outlook for coming year?
Mr. Shah, I request you to please repeat your question. The audio is not clear from your line.
Good afternoon, sir. Am I audible now?
No, a lot of disturbance.
Hello?
Yeah, now you please go ahead, sir. Slowly.
Sir, what is your revenue growth outlook?
Sir, considering our order book and recent order inflows, we are expecting some comparatively much better growth. Because last year we have grown by 30%, if you see the top line. This year, which would be much better because considering our order book that's on hand.
My second question, sir, as you are saying that you are having raw material cost prices due to rise in ammonium nitrate prices. Sir, do you feel in other also coal and crude also impacting your raw operating cost also? That's what I wanted to know. Apart from ammonium nitrate.
Your pardon? Coal
Crude prices.
Crude, of course, it doesn't directly affect us, but indirectly it affects because the petrochemicals are affected, ammonia is affected, the price of ammonia, so naturally ammonium nitrate price also gets affected.
Okay. And my last question is, sir, do you are into exporting to many countries?
Sorry to interrupt you. The
Not clear.
audio is not clear from your line, sir.
Sir, am I right now?
Sir, the audio is breaking from your line. We request you to rejoin the question queue.
Okay.
We'll move on to the next question from the line of Shivan MS from JHP Securities. Please go ahead.
Yes, sir. Sorry, I got there was bad reception. Sir, continuing with the ammonium nitrate prices, sir, one would have expected our the defense orders to be means we can easily have price clauses up there, right?
Sorry? Sir, the question is not very clear. Can you please repeat?
Mr. Shivan, we are not able to hear you, sir. Mr. Shivan, we are not able to hear you, sir. Please. The line for the current participant has got disconnected. We'll move on to the next question from the line of Aryan Verma, individual investor. Please go ahead.
I'm audible?
Yes,
Yes,
sir.
sir.
Yes. Great set of numbers. I just wanted to clarify that the fabrication and supply of R3 rocket motor propulsion system for DRDO for 13 crores that they received, it is mentioned that it is not a material order.
Sorry,
So what do we mean by that?
it is not clear. It's not clear.
I'm saying that the
Can you
audible?
Mr. Verma, request you if you can use the handset mode, please.
I'm audible now?
Yes, sir.
better?
Yeah. So what I was asking was that the recent order of the fabrication and supply of R3 rocket motors
that we have received for 13 crores, you have mentioned that this is not a material order. So do we mean that this is a development order, and is there a chance for this to convert into a production order?
No, sir. The materiality means normally we consider as a material if the order value crosses 10% of the turnover, which is at least 20 crores. So normally we wanted to declare, even though if it is less than 20 crores, it was a voluntary disclosure. So that's why we mentioned it was not a material. Yeah. Considering the value, not anything else.
The line for the current participant has got disconnected. Ladies and gentlemen, please press star and 1 to ask a question. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Shivan MS from GHP Securities. Please go ahead.
Yes, sir. I hope I'm audible.
Yes.
Yes, sir. So I was just trying to ask, in our order book, one would have expected price escalation clauses to be in place, at least for the defense order book. So why then the dip in the margins?
Could not understand.
Sir, we explained you that there was not much dip in margins in defense. Mostly the dip has come from the other divisions, industrial explosives and other divisions.
Okay.
Where, because of the ammonia nitrate and other issues that got offset by the margins in the defense. First of all. Second thing, in defense also, there are different products wherein the margins are different. It is not uniform. First and second thing. Third one, the things got stabilized in the industrial explosive segment also. And we are now expecting some good things to happen, and the losses will not be there in coming days. So the defense margins will be continued.
And one more thing is, in the defense products also, during the development and the design and the qualification stage, the price we get is higher. But once you get converted into production orders, where it is the volumes which increase, there the margin will be a little reduced. That is how the business goes.
Okay. So, sir, majority of the current year's execution is going to be from the bulk orders that we would have got from defense, right? They would not be the initial small trial orders.
Both will continue, because today's trial order will become a bulk order after 5 or 6 years. It's like that. So both will continue parallel.
Okay. And sir, we had discussed regarding the Israeli orders which were under which were trial orders in the last year, and we were expecting some bigger orders from them. Sir, has that fructified, or what is the status for the same?
Yeah, 3 of them have fructified into bulk orders. Another one big order, it is like you mentioned about the price escalation. Discussions are going on. Maybe by next month we will be coming out with the quantities and figures.
Okay, sir. And these 3 bulk orders, sir, what would be the contribution in our current order book?
Sorry?
Current order book.
You are asking about the bulk orders from?
Yes, the 3 Israeli orders which are in hand, what would be the outstanding order book, their share in the outstanding order book?
That was about 40 crores. That was only the development and the design balance order book. And we have yet to sign the final mass production order, and then we will declare.
Okay.
The three numbers what I was telling, the order book, the value is around 40 crores.
Okay. Sir, we were expecting some bigger orders, right?
That is what Mr. Srihari just now told. The bigger order we are expecting in June month.
Okay, got it, sir. And sir, when I look at our cash flows, the operating cash flows, even in the September quarter when we had discussed, and currently also they have been in the negative range. mainly because of high debtor days, sir. So, sir, what is our plan to navigate through this? Because there has been a continuous operating negative cash flows.
Actually, if you see the moment the contribution from defense is going up, obviously the receivables are going up because we know that everybody knows that the realization from defense takes time. So unlike the industrial exposures, so the same has been reflected there in the receivables. And as on 31st March, almost 75% of our receivables came from the defense sector. So subsequently, most of the receivables have been realized subsequently.
Okay, so out of the current debtors, the receivables, sir, how much has been, means as at 31st March, the outstanding, sir, how much has been realized?
Almost about more than 60%.
So out of 71 crores, 60% of that has been realized?
Yes, sir.
Okay. Got it, sir. And, okay, so that's it from me. I'll join back the queue.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Abhishek Podar from HDFC Mutual Fund. Please go ahead.
Thank you for taking my question. Sir, regarding this 630 crores of order book, if you can give some understanding of the execution schedule, how should we see 23, 24, 25 for this?
So most of the order book will be executed in next 24 months. Sir.
Okay.
Except the order book on service sector part, which is for a period of long-term contracts, 7 years, but the supplies and all those are for 24 months.
Okay, and so the services will be linear for 7 years, or it will be increasing?
It will be increasing. There is a price escalation clause. In fact, this COVID has affected our service contractors also because entry restrictions at Sriharikota establishment and all those. After that, now it should also increase the volume, and plus there is a price escalation clause which gives us every year increase to us.
Okay, understood. So services is like 23%, so we should assume that will be 7 years, and the balance 80% or 77% that will be executed in 23 and 24 from this.
Yeah.
Right. And so some understanding on how are you looking at order inflows from defense and explosives in next 12 and 24 months?
Defense orders, yes, because we are participating in many and RFPs inside the country and also for exports. So we are hoping a healthy inflow of defense orders. And commercial explosives, of course, this is annual orders. So now Singareni order is over. We have to complete the supplies against the order. And Coal India, we are expecting some new orders, which is, I think, may take a month or two to finalize some of them.
Right. So, like last year was very strong in terms of order inflows, it's close to 400 crores based upon the back calculated number.
Yeah.
Would you expect this momentum to continue, or we kind of peak out at these order inflow numbers?
We expect to continue based on our participation. We expect to continue.
Right. And the order book mix will remain same, sir, like 55% is defense. So should we assume that that will continue in the same way?
It may further increase. The defense percentage may increase.
Okay, understood. And so the margins, this year we closed with 10.5% EBITDA margins, and with the bulk losses going away, where do you see that settling?
Normally, we don't give any guidance, but definitely you can see a lot of improvement in coming quarter.
Okay, so the defense contribution going up, that will be margin accretive.
Yeah, defense and also aerospace. We have not specifically talked about aerospace. So both together should give us the push.
Okay, understood. Okay, sir, thank you and all the best. Thank you.
Thank you. The next question is from the line of Milan Shah from Urmil Research Consultancy. Please go ahead.
Hello. Can you hear me, sir?
You have to be a little louder, sir.
Hello. Can you hear me, sir?
Yeah, a little bit louder, sir. It's low, very low voice.
Hello.
Yeah, you can wait now.
Okay. Congratulations for taking my question and also good setup number. Sir, I want to understand, we have received the industrial license for PSO license for warhead and fuses. It is already we have this product or this is a new product lineup?
These are new product lineup, sir. New license, warhead particularly.
Okay.
Yeah, but last year itself we started production. We already started production and then some orders we executed.
Okay. And sir, what is the export order from the order book? Quantifying the number.
So you want to quantify the number?
Yeah.
So, about 175 crores, sir.
Okay. And sir, what is the debt level on 31st March?
So we have the current debt of hardly 2 crores, which will be repaid in next 2-3 quarters. It will be zero. Technically, it will be zero by 22-23. And there is some working capital debt, which is about 70 crores. So that's it. We don't have any other debt in our balance sheet.
Very good. We are going to be debt free on buying. Working capital is so keep operational, but we are going to debt free is very good, sir. Thank you for my question.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Belam Rao from Individual Investor. Please go ahead.
Good afternoon. I have one question on the financial and one question generally about the company. Now, with the order book where it is and execution period being less than 2 years, so it will be safe to assume the turnover will be more than half the order book. Am I right?
Yes, sir. It should be. I think to be, it should be.
Okay. Second question is, the raw material prices having stabilized, do you expect something like 13-14% operating margins?
No, sir. This line, such margin is not visible.
Okay. Leave that. So, okay, general question. Now, I was just going to the website. It doesn't say about rocket motors, but you got an order. So I presume you are now making the rocket motors as such, instead of being just the explosive material. Am I right?
Yeah, we are making the full rocket motor.
Yeah, exactly. So, like Skyroot, are there any plans, either yourself or along with somebody else, develop a full rocket?
No, that is different line.
I see.
We are already on our own, we are making the full rocket. That's what I told you. But
the strap on for the ISR.
Yeah, I understand Skyroot is for satellite launch vehicles, but our rockets are tactical missiles, for tactical missiles.
It means smaller in size, is it? Or?
Yeah. These are the two different. No, that is, space rockets are much large. But we are making for ISRO, not for Skyroot.
And that I know. Skyroot is okay, that I understand. That I know also. Okay.
Yeah.
Similarly, is there any plan I was thinking, like that? Okay.
So there are other people like Skyroot who are getting into startups, getting into satellite launch vehicles. They are already in touch with us.
I see.
And
okay,
we
that's
are
right.
also one of the partners for the privatization schemes of ISRO.
I see. Okay, good. That's good. Okay. Right, sir. Okay. But the website could be updated for such information, I think. At present,
we need to do that now.
Yeah, website doesn't say that. Okay. Right. Okay. Thank you. That's all.
Yeah.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Shivan MS from GHP Securities. Please go ahead.
Yes, sir. Thanks for the follow-up. Sir, one question was on the New Space India Limited, the ISRO's new arm. Sir, could you give some update on that? We were supposed to tie up out there, I guess, and some land at Sriharikota was identified for that opportunity.
Yeah, the land has been identified and still going through the government process.
Okay.
Now, so we are hoping that this year 22-23, the land will be handed over to us.
Okay,
In
and
addition
sir,
to that, we are already producing some of the requirements of ISRO in our new Katepalli plant.
okay. Okay, and sir, this space opportunity, sir, what is this opportunity size that we could be, tapping moving ahead?
See, the size in terms of numbers will be less because unlike defense where we have tactical rockets and missiles are made in hundreds and thousands, there it will not be like that. It will be single digit or two-digit numbers maximum what we will be producing. So in terms of turnover and all those, it will not be as big as defense opportunities.
So you said it will be as big as?
It will not be as big as defense opportunities, that's what I'm saying.
Okay, and the margins would be similar to defense or higher?
Yeah, margin will be similar to defense.
Okay, got it. And sir, in one of the previous participants, you said that there have been bulk explosive losses within this year. Sir, could you quantify those losses which are not expected to come moving ahead?
Okay, you want to know the losses for the previous year?
Yeah, you said there were certain losses that you had to take in the bulk explosive segment, if I heard correctly, which will not come in the current year. Is my understanding correct out here?
See, in the allocation of the overheads and all those, we follow different kind of head office and all those distribution based on the contributions of a particular division. So exactly giving you the figures on the division wise is a little difficult.
Okay. Any ballpark, sir, so that we understand what could be our margin profile moving ahead? Because there has been a significant change that has happened. That's why. That's my reason to ask the question.
This being a highly competitive field, there are more than 40 competitors in industrial explosives. So this is a little bit sensitive information. I hope you will understand.
Okay. Correct. But sir, one thing is for certain, right? That the margin improvement from FY22 to FY23 will be substantial. Hello.
This is the operator,
Yeah.
so we are not able to hear you.
Hello?
Yes, sir, we can hear you now.
Yeah,
Yes, sir,
definitely year 22-23 is going to be better.
Okay, got it. Okay, thank you, sir.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. Participants, to ask a question, you may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1. As there are no further questions from the participants, I would now like to hand the conference over to Mr. T.V. Chaudhary for closing comments.
Yeah. Thank you very much. Thank you very much, everybody, for the interest shown in the company and its performance, and also for wishing us a better future. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Premier Explosives Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.